Hi traders. So in today's video I will talk about one of my favorite strategies that you can learn very quickly and you can trade with it in a few hours if you write down all the details and you understand the strategy and you are prepared for the strategy. So let's just jump into it. Now this strategy uses three indicators: ADX, CCI, and simple moving averages. Now, in my previous video, I already talked about CCI, so I won't go further in detail this indicator. ADX is basically an indicator that measures the strength of the trend. So basically, when the ADX is high, the trend is strong. Now, of course, it is relative what's high and what's not. If you are using the default length of the ADX, it is somewhere, somewhere above like 25, where it started trend, and above like 75 it is an extremely strong trend until like 100. So it is a simple measurement of the strength of the trend, and ADX is actually one of the greatest indicators of all, and I can say it honestly, because as you know, I've coded thousands of indicators, EAs, strategies, and I tested them, and ADX, when I add them to my strategies and to not very profitable strategies, those strategies turn into profitable if you use ADX in the good way. So let's see an example strategy that you can try out immediately on your charts. So we have our buy trade entry, and I brought you an example trade. Of course, I will show you the whole statistics of 1 year data with this strategy, and not with just some bullshit tick data quality, and even like most YouTubers do it without tick data, just some manual testing. This bullshit. I tested it with robot, and so there is no human interaction that can mess the things up, and because I don't like to bullshit. And so I will show you the statistics of the 99.9% Dukascopy tick data test. But first, I tell you how to trade with this strategy. So our buy entry is really simple. Basically, we need two simple moving averages. One 63 period moving average, that is the blue one on the chart, and one is a 103 period simple moving average, that is the red on the chart, or the some kind of red. So our strategy is really simple. We take a buy trade when the two moving average crossed, and in this case the 63 moving average crossed above the 103 moving average. And our second condition is the ADX. Now that is really important, to not use the default of the ADX, default length. And what I use, and I've backtested it, and it works much better than the default. And this is why it is really important for me to code my strategies, and the ability to backtest it on live real tick data, on 99.9% tick data. That is the highest quality available on the markets. So what you should do is here just adjust the length. So it is on default mode 14, but you should adjust it to, as you see, 23. And if the 23 ADX is above 30, as you see, it is just above 30. So it is just a perfect entry for us here because the cross happened and it is above 30. We should take a buy trade. And I will show you the real statistics of this strategy because it is quite amazing. So it is not just an average kind of good strategy. When I looked at the statistics, even I was blown away because it is so good. So it really works. So this is our entry strategy. As you see, it is nothing fancy. It is so simple. And our exit strategy is really a key factor because our exit strategy includes an element that I use in all my robots and all my price action strategies, and it really works. And when I add this to my strategies and robots to test, it level up those strategies, even if they are bad. If I get some strategy from one of my clients to boost that strategy up, I add these and it really works. So basically our buy trade exit, as you see, it is just almost the perfect point to exit. It is really good. So let's see how we did it. Because this trade that I show you, I haven't just drew this shit up to the chart. It is a trade that I tested with the strategy, this strategy that I tested with the algorithm, the robot. It showed me this trade. So it is not some bullshit that human drew up to the chart. It really did this trade. So basically, we would need a different length ADX to the exit strategy. That is 21. It is really important to use the correct numbers if you want to be profitable, of course. And we exit the trade if ADX is below 10. Sorry, to be accurate. We have to adjust the ADX smoothing as well. That is to 21 as well. So basically, what I want to tell you is look at the charts and let's see why the strategy works so fucking good. And so the first thing is that is really important. We have an X minutes have passed since entry parameter. I use it in all of my E8s because it is just so efficient. You can only close your trade if a certain number of minutes have passed, and I trained with this algorithm with AI system. So it is really working. It is not some over optimized curve fitted shit. So let's see. It means that approximately this much of hours, and I calculated it for you to just know, this much of candles on the 30-minute chart that we are using have to pass since the entry until you can close the trade if this condition happens. So if you look at this, it never really went below 10, and it is really good because we could hold this trade to the core of its potential, to reach its potential, and here it just went below 10 and the system could close the trade because I trade with robots, but you can trade this strategy, of course, manually because it is an easy strategy, nothing fancy about it. And this is why I show it to you. So yeah, this is really simple. I hope you understand it. Just save a screenshot of this and learn this strategy, and really important to actually follow the strategy. So follow these rules. They are not some unnecessary detail that you don't have to follow, and you will just close the trade here, because then you won't have the statistical advantage that you will need. So this was basically the entry rule of the buy trades and the exit rule of the buy trades. I just want to tell you that always use a safety stop loss, because of course if you would just wait for this many hours and the market is just go way in the opposite direction, then your trade, you will lose a lot of money. But if, of course, I guess it is obvious for me, but I tell you because it is part of the strategy, to always use a minus 150 pip stop loss. That is just a safety one, because the exit strategy is so good with this strategy that when I backtested the whole system, the safety stop loss only activated once. So it won't be activated too much time, but of course we have to care about the safety of our entire account, and this is a great way. So and I will show you the real results, of the entire strategy, and why it is not too much to have a minus 150 pip safety stop loss, because we have 300 and 400 pip winning trades. So our overall risk to reward ratio is very, very good. And let's see the sell entry and sell exit trades. So here we are. Let's see our precious sell trade entry and sell trade exit. Of course, if you saw my other videos, you already know it. What is really important in trading is that you can't trade with a completely symmetrical strategy, because in the Forex market, long and short trades aren't they don't require the same entry and exits, and that means that you can't just go and reverse the buy entry and exits and trade it as it is the entry rule and exit rule of the sell trades. You should create a completely different and new entry and exit rule and conditions to the sell trades as well. So that means that, of course, the strategy should be similar and containing the same kind of indicators, but you should add new elements to it and experiment. Because when I test my robots and my strategies with algorithms, I often find it out when I try to be too symmetrical, it works so it works worse than when I add some asymmetrical elements to the strategy. And it has a mathematical reason behind it that if you are interested in, I will make some videos about it, but this is a simple video about the strategy explanation, so let's just do it. Sell trade entry. Now, our sell trade entry is really similar to our and our sorry, a moment, it is below, of course, because we are doing a sell trade, and it is not obvious because we could do that in a symmetrical way, so it could be an above function, but it wouldn't be so nice. So let's see this. First, I will show you the entry rules. Now, the entry rules are the following. When the 63 period moving average crossed below the 100 and 70 period moving average, and the ADX that is 27 length, right here in that area, it is perfect, because before that it wasn't the case. so we couldn't take that trade. And of course we need a cross as well, so we'll need a simple moving average with a source close. And let's see, so as you see here, both parameters are met, and we have a really nice clean entry. It just crossed and we are above the level we want to be above, so it is a perfect entry, and we took the trade, and my algorithms took the trade. So as you see, it is a nice trend trading opportunity, and the system spotted it perfect. So this is the entry rule. Now let's see the exit rule, because it is just as important, and as I told you in my previous videos, most of the time it is more important than entry rules, let's be honest. So let's see, because if you don't have a really good exit strategy, you will lose, because, and I will tell it in every of my video. So if you have a good entry basically and you have a bad exit, you will lose. If you have a bad entry and you have a good exit strategy, you will still win. So it kind of proves that exit strategy and money management is more important than a really precise entry. Of course, we have to enter the markets just as precise as we can, but we have to treat exit strategies just as important, and I do that, and I want to give this knowledge to you. So first we will need a CCI for this. Let's see. So we will need a CCI, but with a different length and a different source that is the default in TradingView. So we need a 5 length and we need a close as source. Then what we have is CCI, the 5 period CCI is above 10, and we have here our great X minutes have passed since entry parameter as well, and we are at a position where we have to hold our trades for more than 3 days, 3.5 days approximately. And I calculated it, the candle count for you if you need it, and the hours as well. So as you see, we had the first condition met many times, so it was above 10 many times, but our condition that we established wasn't met, just so we had to wait, and it was our benefit. And this is why the system, the algorithm, shows us so good results, because we basically follow a really simple rule that is profitable, and that is a patience measurement in some sort. So it means that if you are not patient enough, you won't be a good trader. And I'm sorry to say this, because most scammers in the markets tell you that you can be millionaire with scalper robots, but based on my tests really and my live trading experience, it is not the case. You have to be patient and you have to wait for the trades to reach their potential. So we waited just that amount, if you see, and we had a really nice trade. It is about 100 pips. So yeah, it is a pretty simple rule, but it requires huge discipline to follow this rule. But if you do that, my algorithm and my testing with 99.9% data quality says that it is profitable. Of course, there are no promises in the Forex market, so this is not some, official advice to trade this strategy, but it can be profitable based on real tick data. So now that I showed you the strategy itself, I will show you the trades that the algorithm did in visual test mode. Let's see. So here we are in MT4. I did this test for you with the highest quality tick data that is avoidable on the markets, because I'm a professional coder and trader, and I need that tick data. So if you are interested in that and how you can get it, I will just tell me in the comments, and I will share the link with you. Because if you don't have real highest quality tick data, you won't know if your strategy works or not, and it is 100% the truth. I realized it in the hard way too. So these are the trades that the strategy did. Basically, if you take a look at it, most of the time when it is right, it is very right, and when it is wrong, just cut the losses quickly. It is what every hedge fund manager tell you, that if you are wrong, just cut the loss quickly, and if you are right, let the trades run. It is the #1 rule. And most traders don't follow this advice at all. And as you see, these are really, really good. It is, here, I will show you. Here, it is the start of a trade, and if it's blue, it is a buy trade, and it is the end of the trade. And if it is a red line, it is a short trade, and it is the end. So as you see, these are some good amount of pips that the strategy made, and it is because of the elements that I implemented to create a safe but not too boring strategy for you. So I want to show you some highlighted trades just to see that it did. It basically caught whole trends, and it traded like almost perfectly. And these are even 300 pip trades, so these are really good. And it doesn't. It just traded as a pro trader, because of course there were waves and stuff, but this strategy does not have emotions. And if you have emotions and you don't follow a rule like this strategy, you will close your trade I don't know, on so many times. But if you close your trades like here, that is really good actually. But if you close your trades too early, you will do this every fucking time. And if you would have done it here, it just, you won't be a profitable trader if you micromanage your trades, and that is a key factor to don't do that. I will show you some sell trade examples as well. Here it is. It is basically the perfect place to sell this trade, and it did exactly that automatically. And this is a pretty nice trade too. I wanted to show you that. And of course, you will have trades that are not profitable, because that is part of the game. But at the end of the day, you will close in overall profit, and that is what we are aiming for, because we want to be real traders. I hope so. Yeah, so now I will show you the statistics of this strategy. So let's see the real tick data backtest result of this strategy. As you see, I am backtesting with Dukas copy, and it is not some bullshit tick data. It is 44 million ticks, and I use variable spread because I want to create an environment that is real. and I backtest with every tick data. So let's do it. And I will show you the whole chart and the trades as well. Yeah, so as you see, when it is not right, so basically it enters the trade at the wrong time, it just closes it early or pretty early, because of course sometimes the system can hold a wrong trade for, you know, a medium time period as well, but most of the time when it is right, it let the trades to reach their potential, and when it is wrong, it closes the trades early, so it won't blow the account because it holds some big trade. It won't be the case. So as you see, it is a huge trade, and when it is not right, it is really it is not just the half of the average you know, winning trades, but it is less than half when it is not right. So it is 99.9% tick data quality. It is every tick, and let's see the report now. As you see, it is the mismatched chart errors are 0, and our modeling quality is very good, so it is a reliable data. Our drawdown is not so bad. It is 14%. Actually, it is really good compared to scalpers and martingale systems. And let's see the most important ratio that we will look for, and that is the risk reward. And so our average profit trade was more than double on average, you know, than the average loss trade. And it is the ratio that you always had to look for. And if your total profit trades percent is more than 50, then you have an edge over the market with this two result. And that is almost 70% with this kind of risk to reward ratio, and that is amazing. It is, you know, when you have a scalping system, you have basically a so bad ratio, because maybe your average, your win percentage, you know, is like 90%, but the price is that you give for it to is that when you have a losing trade, that will be like $300 and a winning trade will be $1. So that means that if you have 10 trades and 9 is winner, that means that you have a 90% win rate. But that one trade that is $300, that will blow your account. But if you have like 5 winning trades and 5 losing trades, and that means that you have a 50% win rate. And scammers always tell you that win rate is the most important, but actually if you have a 50% win rate and your losing trades are like $1 and your winning trades are $10, then you will have a overall really good profit, and it will be much better, like, you know, couple 100% better than if you would have a 90% win rate. So you have to look at the statistics in a real way, not in a way that the scammers tell you. And our biggest profit trade is much higher than our biggest losing trade, and that is an important factor as well. So I hope you enjoyed this video, and it was kind of an eye-opener for a real strategy. And if you like this kind of videos, just hit the like button.